Hey, this is Danielle. Amazon reports earnings today after the bell, and I'm going to tell you why I think this is the most important event in the market this week. That's because, first of all, if you look at the NASDAQ, it is stuck below the 50 SMA on the daily chart. Check this out. So we saw the NASDAQ top out around 18,700. We started losing a lot of momentum. We started seeing some volume selling right around here. That was right around tax day. And then we started having mega cap tech earnings, right? Well, that didn't cause a bullish catalyst in the market. Sure, we got a little bit of an updraft here, but we're still underneath all these areas of resistance. And what that means is that we're going to need to recover up above this 50 simple before we can resume an uptrend. And until that happens, the path of least resistance is lower as we enter May. And you may have heard this saying, but it's sell in May, go away. Is it going to come true this year? As of right now, it's looking like it will. So, what opportunities do we have on this calendar to correct this trend? Well, we have Amazon earnings today and potentially the Fed, but I don't know that that's going to be helpful towards this market situation right now. So, what does the NASDAQ need to do to recover? Well, we're going to need to trade higher by at least about 400 points, especially given that we're now down another 200 points today. So let's go ahead and look at Amazon. Do we think it's possible for Amazon to be the catalyst to send the NASDAQ up through the 50 simple, correct the downtrend, and help us avoid sell in May, go away? Well, if you look at an Amazon chart, Amazon actually looks phenomenal. I really can't complain about it at all. We've had an incredible bullish trend since it bottomed out around $81. You can see that there's also a daily squeeze. I love myself a daily squeeze. When you look at this right here, plus the shift in volume, plus the hold of the 50 simple, plus the Fibonacci levels targeting 200, and then up even higher at about $220 a share, I think there's a great chance that Amazon trades higher. Flipping over to my earnings hot zone where you can see the earnings stats, what you'll also notice is that the last 3 quarters in a row, the stock has gapped up post earnings. What that means is that they've been in a bullish trajectory as of late. Investors have been happy with the numbers that they've been listing, and we've been seeing positive reactions. So, I'm looking at the stock and I'm saying, okay, it has some great technicals. The reactions have been positive lately. Not only was the initial reaction positive after earnings, but you also continued to see buying throughout the quarter, which is positive as well. But I do have to go back a little bit further and say, this is kind of a newer trajectory because the 3 quarters before that, down, down, down. And it wasn't that long ago that we were trading down here at $81 a share. So there's definitely reasons for investors to be cautious. Additionally, you have the fact that this is a crowded trade, okay? When you look at Meta and you look at Netflix and you look at the way that both of these stocks got creamed, what happened here was they were such obvious longs, like Amazon, right? They'd been on great trajectories. Everyone was anticipating this report in a very positive manner. I asked traders in our trader room, which way do you think it's going to go, up or down? And it was hands down up. Meta's going to crush it. And so what happens is you get those crowded trades where everybody thinks it's going to go one direction, and then suddenly you have just a massive break in trend. And at this point, Meta is stuck below the 50 simple. It's actually stuck below the 100 simple, and that actually looks like it's going to roll over and die even further. If you go to Netflix, this is the same thing, right? We'd been in a really positive trajectory. Investors were happy. It looked like it was going to break to a new high, and then suddenly expectations are too high. The squeeze fires to the downside and it rolls over. So what does that mean for Amazon? I don't want to bet against Amazon because they've been doing so well. And I think the setup is pretty clean going up into the $200 price point. You have this stock trading at $179 a share right now, and you have a market maker expected move of $13.91. So it's not out of the realm of possibility that Amazon trades up into $200 a share. So I think that for me personally, I have to have some bullish trades on this. And I haven't looked at the options chain quite yet, but I'm probably going to select either 195 or 200 as my upside target. Probably going to put a butterfly up there. I'm going to be going over all my trades in the options room at the close coming up here pretty soon. But I also think it is worth having a bit of a hedge on, either in the QQQ or in Amazon itself, because here's the thing. With that $13.91 expected move, if there's a surprise, or if it's not even a surprise, it's just the fact that the results are good but not phenomenal, what can easily happen is you can be down here at 165. That's within range of the expected move. And while 165 wouldn't be that terrible because you'd be down at the 100 simple, the problem with Amazon would come if and when it breaks 165. Because if it breaks 165, that's where all of this starts to go away, and you're suddenly looking at the 200 simple at 150. So here's what I'm telling you today. I think it's highly likely that we trade higher because of the technicals and because of the recent fundamentals. But because the trade is so crowded, I think we have to be open to the possibility that Amazon can bring the NASDAQ down and it can break through 165. So I'm going to be placing some bullish trades up here, but I think I'm going to add some hedges as well, just in case we get that downside surprise. Now, if we wake up tomorrow and Amazon's below 165 and the NASDAQ's down another 200 points, I mean, I wouldn't prefer that scenario, but I also wouldn't be completely shocked. That's where we're going to have to start looking at the lows that occurred on April 19th. So that's the critical line in the sand. That's the zone of support in the NASDAQ. If and when the market retests that zone, that is what we need to be eyeing, okay? We need to pay attention to price action. We need to pay attention to market internals. And we need to see the way that the market reacts down at those lows. Because if we're getting high volume selling, high ticks, the put call ratio isn't going high enough, then what that means is that low is going to break and we're going to flush all the way down to here. So Amazon earnings is a very critical event that's going to be occurring today. I hope you're prepared. I'm looking forward to it. Let me know how you're trading it down below, and I'll see you in the next video.